All right, well, good afternoon, everyone. I'm Paula Turley. I'm your 2022 president of the Eastern Connecticut Association of Realtors, and I call this meeting to order. I'm happy to welcome you all today. We're thankful to have Cindy Butts, the CEO of the Connecticut Association of Realtors, who's here to clarify what we need to know about teams, what we need to know about our brokers licenses this year in 2022, and what's happening on the legislative side of things up at CTR. We're also here to listen to our affiliate with InSource CPA, that's Greg Antipoff. He specializes in realtor taxes, and he's going to tell us a little bit about what's really important to know this year about our taxes. But first, we have our past president and current board of director member, Mary Casabria, and she is here to do our invocation for this morning's meeting. So Mary.
Good morning, and hopefully I can get through this before one of my dogs breaking out into God Bless America or something to that effect. So as we look on to the 2022 Winter Olympics, let's consider Pope Benedict's prayer from 2012 that the Olympic Games would be a true experience of brotherhood, and that in the spirit of the Olympic truce, the goodwill generated by this international sporting event would bear fruit and promote peace and understanding throughout the world. As athletes begin a new day of friendly competition and realtors begin a new year of even sparser listings, let us take a moment to hope for courage and confidence, that we all do our best, that we act with a spirit of fair play, that we remain gracious in our service to our clients and to each other, brave in our attempts to uphold our profession, and proud of who we are. And in the finest tradition of the Olympic spirit, may athletes and realtors alike strive to compete with mutual respect, excellent sportsmanship, and may we all work to improve lives, overcome differences, and find a path to peace. And as realtors, may we all wear the gold. And may I ask you now, if you choose to unmute yourself, either stand or sit very straight in your seat for the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you.
Thank you, Mary. So I'd like to give a brief overview where our association is right now. Currently, we have 1,078 members and realtor members, and we have, in addition to that, 126 affiliates. That's an 8% increase from last year. Our pre-licensing classes are doing very well right now, and our overall fiscal strength is at an all-time high. It gave us the ability to purchase 35 Connecticut Avenue last month. We'll keep you posted on that building, but for right now, we're going to be landlords for a few years with an excellent return on that investment. Also, we have a committee that is currently reviewing our awards criteria for Realtor of the Year, Affiliate of the Year, Rookie of the Year, YPN, and we're actually looking to add a Commercial Realtor of the Year as well. Once the committee finishes their task, the nomination form will be made available, and we're going to have a celebration, an award celebration on June 9th. So mark your calendars for that date. This is a complete and strict review of your peers. And the way that folks get nominated is through you. So if you don't nominate someone, they're not going to be added to the list. So make sure that you throw your nomination in for the realtors that you feel deserve those awards. The YPN committee is working on a membership meeting to commemorate Fair Housing Month in April. And the Government Affairs Committee has a number of initiatives, one being a virtual treasure hunt, and there's also a squirt gun beach picnic that's going to be happening in July. So look for that. As part of my challenge, the President's Challenge for 2022 that I outlined at our inauguration, I'm encouraging all ECAR members to take the C2X challenge at c2x.realtor. It's free and it will add to your professionalism. Also to complete the Fair Haven Challenge and to make your investment into RPAC. All we ask that you do is get involved with our association. This is your association, so you have to make it what you want it to be. I'd also like to welcome the new members. Since our last meeting in January, we've welcomed 18 new Realtor members, including Barbara Hernandez, who I think is on the call, and one additional affiliate. Is there anyone else that's here? Please raise your hand to be recognized or speak up on mute. All right. Well, it's time to introduce and extend our thanks to today's sponsors. And I encourage our members to get to know who your affiliates are and give them an opportunity to do business with you. For our diamond sponsors today, we have Dustin Murray, who is also the president of the Builders Association with Green Home Solutions. Dustin?
Sorry, my printer's going off. Let me see if I can stop it. Oh no, terrible timing. Hi, I'm Dustin Murray with Green Home Solutions. For those of you who don't know, we are your indoor environmental professionals. We specialize in mold, bacteria, and virus. And like Susie said, we are. I'm also the president of the Builders Association, so I'm very proud to be a part of what's going to be happening tomorrow night. That I get to bring my two worlds together as president of the Builders Association and the Realtors Association, which I'm also very involved in. For what I feel is going to be a celebration of the last couple of years, and hopefully the start of some of us all making some very good new connections and relationships. So thank you for everybody for allowing me to say hi and continue to include me.
Thanks, Dustin. We're very glad to have you. Also, we have Gina Canauer from the Law Office of Albanese and Canauer. Gina?
Hi, everyone. Thanks for having me. I'm Gina Canauer. We're real estate attorneys here in Gales Ferry, Connecticut. We look forward to working with you all this year, and we wish you all much success. Thanks.
All right, thanks, Gina. And we also have Tom Morgan on the call with Sound Home Inspections. Tom? Is Tom here? Oh, I don't see Tom on the call anymore. Okay, so I don't think Tom is here. So if he comes on, we'll circle back around. But I know we do have David Johnston because he's already made some comments about Sasha, Susie's puppy, and that's with Prime Lending. Dave?
Hi, everybody. David Johnston, Prime Lending. Good to see you all. I wish we were doing this in person. Hopefully we'll get to do that soon. But just wanted to say real quick that we do have a new FHA program, the 100% financing, FHA, 640 credit score, 1 to 2 units only, no income limitations. If you want to give me a call if you need more information about it. But good to see you all.
All right, thanks, David. I appreciate that. It's always good to know about new lending programs. All right, so we also have some platinum sponsors. Chelsea Groton Bank, who we don't have anyone here just to say shout out, but the shout out as a platinum sponsor. We have Tori Setti, who is here with Gateway Mortgage Services. Tori, are you here?
Yeah, I'm here. Hi, everyone.
All right, so there's Tori.
Oh, can I give a little hello?
You can say, give a little hello.
Okay, great. Hi, Tori from Gateway. Thrilled to be at this meeting again. I've listened in on Greg for the last like 2 or 3 years, and I just love everything he says. While we're getting into tax season, it's really important that you have your self-employed borrowers and or you as real estate agents check in, see where they stood last year in qualifying terms, and to see what is coming up for the new tax season. It's the perfect time to kind of reevaluate everything. And also, if you're self-employed and cannot qualify using your tax returns because you have an awesome CPA that writes off many of your expenses. There's great programs out there, non-QM, competitive rates that can use asset utilization, things like bank statements to get you qualified as well. So yeah, happy February, everyone. Thanks.
Thanks, Tori. All right, we have Keith Turner with Homestead Funding Corp. Keith, is he here?
Yep. Hey, Paul. Hi, guys.
Oh, hi, there he is.
Keith Turner, yep, with Homestead Funding. Good to see everybody on the call. Yeah, just as to follow in suit with Tori and David. Wow, I'm sorry. Yeah, wrong Johnston. I had in my head there for a second. So yeah, with a lot of these programs, what we're doing right now is a lot more pre-approvals as opposed to pre-qualifications. Kind of give those buyers a heads up, a little bit of a leg up, as I'm sure the other lenders are probably doing in this market, as well as CHFA has gotten a little bit more competitive too, where they've gotten rid of their normal point that they charge, so their closing costs are a little are actually now better, given that interest rate lower, but then also allowing the debt to income ratio to be as high as the FHA ones. So what used to happen is if they weren't putting any money down, they're kind of capped out at what they would qualify for. And then you'd go FHA to go a little bit higher. And now they've kind of caught wind of that. And they said, you know what, let's be a little more competitive in this market too. As well as allowing people to roll those closing costs and the down payment into the mortgage. So you guys as realtors don't really have to worry about negotiating closing costs, because we know how well that goes in this market. But yeah, so any questions, feel free to give us a call here over in New London. And like, once again, good to see everybody on the call. Thanks.
All right, thanks, Keith, and congratulations on your marriage.
Yeah, she's stuck with me. Thanks.
All right, we have Liberty Bank is also a platinum sponsor. And we have John Peck here from Peck and Tenevsky. John, you want to say a couple things?
Sure. Hi there. How are you, everybody? I'm glad to be here today. Stuck with Keith's face for a few minutes, at least on my computer. Just wanted to let you know that we hired a new attorney. Her name is Heidi Ferrier. Hopefully you guys will meet her at future membership meetings, and looking forward to a good 2022. So good luck, everybody. Paula, congratulations on your presidency, and talk to you guys soon. Bye.
Thanks, John. And lastly, we have for our platinum sponsor is Sunrise Home Inspections. All right, we have for gold sponsors, just a shout out, we have Kyle Clark here. You want to just say hi real quick, Kyle, so everybody can see your face?
Hey, everybody. Good early afternoon to you. Good to be here. I see some familiar faces and some folks I haven't met yet. Glad to be here. So thank you very much.
All right, thanks, Kyle. And he's with National Property Inspections. We have Sue Fasciani here. Sue with Tiger Home and Building Inspections, just to say hello.
She's teaching.
She won't be on until about 12:30.
Oh, okay. All right, no problem. And that is it for our gold sponsors. Did I miss anybody of our sponsors or affiliates that are here today? All right, no, I guess not. So thanks again to our sponsors. Before we introduce our featured speakers, I'd like to call on Greg Broadbent. He's got a tech tip for all of us. Greg, are you there?
I am here. Can everybody hear me all right?
We can hear you.
All right, so as many of you guys know, I'm an advocate of the Sentry Lock boxes. I love using them. A lot of people, I think, are not very familiar with them, believe it or not. So just a quick once over of a couple of things. First of all, I just want to show people exactly how easy it is to use the app. You literally, all you have to do is you turn on your phone. There's an app, right? And you just hit the app. The app comes up. You have a lockbox. You hit the enter button. They talk to each other for a couple of seconds. Sorry, you have a PIN number. If you know your PIN number, you memorize it. Otherwise, with me, I just put my finger on the back for the finger pad. It logs in. They talk. the lockbox opens. All right, it's literally that easy. There's no card that you have to keep and update. You don't have to, update your app or anything like that. It just stays on your phone. So if you're just a buyer's agent and have had reluctance in using this, it is super, super easy to use. And eCar pays for it. So it's a program that's already kind of incorporated into eCar. So I definitely encourage people to at least try to use it a few times. Second of all, if you're a listing agent, again, it's really easy. Every problem I've ever had with a Sentry lockbox, I've also had with push button lockboxes. I've had them get jammed. I've had push button lockboxes get jammed. I've had push button lockboxes get filled with water and frozen. I've had the keys, you can't get them out. I've had somebody even change the lockbox combination on me before without telling me and had to drill it out. So all the problems you have with a push button lockbox, the Sentry lockboxes I find actually have less problems than them. One of the things that a lot of people don't understand is that push button lockboxes have a lot of liability in using them. I mean, if you're using a 4-button combination, there's only about 210 combinations on those things. So people can guess them pretty easily, let alone if you're using one of the 1, 2, 3, 4, or any year birthday or anything like that. If you look online, there's a lot of E&O insurance companies that say, if you're using the push button lockboxes and automatically putting those instructions into your showing, apps and stuff like that, then you really don't know who's gone in the property and when. And if you're an agent that uses a similar lockbox code on lots of different properties, again, you might be opening yourself up to some liability because you're not properly securing the property. So by using these electronic lockboxes, you can log who's gone in. So, I mean, I've had people on push button lockboxes go back for second showings without telling me. With these lockboxes, I've had people come, leave doors wide open, in the house, forget to close them. And I can call them back and tell them, hey, I know you were the last person there. You left the door wide open. Or, I know you, flushed the toilet and left it running. I know you, your client was the one who decided to rip the carpet up in order to see, is there hardwood floors under those carpets on a vacant house? These lock boxes give you some protection. And if you ever had to go to court over something, because you can say, I know that this is the person that was in there last, and you can properly keep the property secure. Again, I mean, it's just, I strongly advocate people at least trying them out, because they've been really great for my business, because I don't need to memorize a new code for every one of my listings. I just walk up to the house, use my app, and I can get in. I've had appraisers. I don't need to give them a code. I don't need to figure out what code I have on that lockbox. I can just send my 1-day code. 1-day codes are generated by using the app. You can give a person a code for a specific day. They can use it anytime during that day. The code is good for an infinite number of times for 1 hour from when you first use it. So if you get to the house to use it, you open the door, you close the door, you have to come, you forgot something, you can go back in using that code all within an hour. But after that, the people can't come back again without you knowing. And so again, you have control over access to that property, which again, helps in a lot of different ways. What else? I don't know. I just really think everybody should be trying to use these. I don't know if anybody else has any tips they want to, share as well, or complaints, stuff like that. I mean, the biggest complaint I've had is from people just not really understanding it. They think it's difficult. They think it's hard. They think it has lots of problems. They are battery operated, so they do need to be charged once every 2 to 4 years. Okay. And when they need to be charged, you just bring them to eCar and they'll change the batteries for you. Okay. I've done this a bunch of times. And that's usually the only time your lock boxes have problems. So every once in a while, yes, the battery might be running a little low. They just need a new battery. Like I said, that's my tech tip. Use lock boxes.
All right. Well, thank you, Greg, so much. I completely agree with you. I started using the central lock boxes after having a problem at a property where we didn't know which who was the last agent, and there were 3 agents going to go see it, and they left the door wide open right before a major storm. So a neighbor noticed it and closed the door. It was really tough. So now I use
Paula,
them. So.
I also just wanted to mention that the e-car has waived the $35 fee, setup fee. So just wanted to mention that.
All right, thanks, Kathy. Excellent, good to know. All right, so now it's time to start it up again. There we go. All right, so next up we have Greg Antipot. He's an affiliate of ours here over at eCar. He doesn't need any introduction. He provides guidance and tax tips to keep you informed as we enter into our tax season for 2021 going forward. Greg, are you on the line?
I am. Good afternoon, everybody. I'm going to go ahead and share my screen. Paula, are you able to hear me?
Loud and clear.
Perfect. All right, so let's go ahead and share this. All right, and you're able to see the shared screen?
I can.
Perfect. All right, awesome. So that little on air symbol was a reminder for Susie to resume the recording, but also if I could give a quick disclaimer, I am an accountant, I am a tax advisor, but I am not your tax advisor. So anything I say here, make sure and check with your advisors. And for those of you who are my clients on this call, I am still indeed your advisor. I'm not firing you live here on Zoom. Also, this information is current as of the time of this recording, which is February 15th, in case you're watching this sometime in the future or in the metaverse or wherever it may be. All right, so let's get started. This is going to be a quick 2022, 2021-ish update as we head into tax season here. So information about some changes and what we need to be paying attention to as we start the tax season. All right, here we go. Topics we're going to run through real quick. We're going to talk about checking your mailbox, and I'm talking about your real mailbox and not your email. There's some new additional letters that you should be receiving this year from the IRS. We'll talk about that. We're going to run through some things about taxpayers with children. There was a lot of law changes pertaining to the pandemic that were heavily skewed to taxpayers with children. So we'll talk about those. Some quick reminders about previous tax changes that I'm seeing realtors kind of misunderstanding or missing some opportunities. We're also going to talk about a really big one, which is a paid and sick and family leave credits. If you happen to have been caring for somebody who had COVID or a school closure, or if you were unfortunately sick yourself with COVID, we'll talk about those. And then, of course, as time permits, at the end of this, I am here for you and to answer your questions. That is an awesome sign that I'm pictured in front of there that I had the opportunity to take last month. I was down in Florida for their midwinter business meetings, and I couldn't pass up that opportunity. That sign, it doesn't give it credit in this picture, but that sign was probably about 6 feet tall and I don't know how many feet wide. So awesome. All right, you've got mail. There are a few new letters that you should be or possibly receiving from the IRS this year. If you received any of what was called the economic impact payments last year, commonly known as the stimulus payments. Also, there was something called the advanced child tax credit payment. I will get into exactly what that is here shortly. But if you did get those, you should be receiving a letter for that. Those 2 letters you are going to need for your tax preparer. So whether it's you preparing your taxes or you have somebody else do it, there's very important information on there that will hold up your tax return if you do not have those. Likewise, a third item you might be getting in the mail is there's increased emphasis on having taxpayers apply for an identity protection PIN. This is a PIN number you get from the IRS that will is required when we e-file your tax return. Therefore, somebody who does not, or if there was fraud attempted, the return would be denied because it doesn't have the PIN number that was sent to you specifically on there. And of course, all of you are familiar with your 1099, what is now called an NEC. It changed 2 years ago. This is your non-employee compensation form you get from your broker, listing out what you've been paid for the year in terms of your commissions. Just the reason I'm mentioning this, just a little emphasis, is to also request a commission statement from your broker. I often see where the 1099 does not necessarily match exactly what you received in your bank account. And sometimes there's a hard time reconciling why that number doesn't match. Sometimes the 1099 is the complete gross commission number, then it doesn't account for splits or desk fees or other things. So I always say request a commission statement so you see what you have the ability to deduct or not deduct based on what's reported to the IRS on your 1099. Actually, let me go back 1 second. So it's important. If you did not get these letters, you can go online, and you should go online to irs.gov/account. On there is a way you can log in and create an account with the IRS where you can retrieve whatever your economic impact payments were. You can retrieve whatever the advanced child tax payments were. There's also a bunch of other helpful things you can do in there. See what the IRS has on record for you, past if there's any balances due. There's a lot of tools in there, and they've made significant improvements in the last year, and they continue to make improvements there. Also important to note, on these letters, and if you log into the irs.gov website, if you happen to be married, these letters are going to only show, each letter is only going to show half of what the actual payments were. So if you have a spouse, you're going to need your letter and their letter to equal the total amount you received. Same thing with the irs.gov. You can't just say, well, hey, I'm the one who does the taxes, I'm going to set up the account. You know, my spouse isn't good at the technology. You're going to need to log into both accounts because there's going to be different information in both accounts, and you have to combine those two. All right, so let's just quickly, we all know what the stimulus payments are at this point, but there's a couple things worth noting. If you did not get the payments and you qualify for them, it becomes what's called the recovery rebate credit, which will be filed on your 2021 tax return. And so you will get credit for, or you will receive a credit for the amount of payments that you should have received. This is common if you had a very high income, say in one of the previous years, and the IRS said, oh, you're not entitled to the payments, but your income has dropped and you now are. Likewise, some folks did receive catch-up payments for the round 1 and round 2 when they didn't get the full amount. So you're going to want to reference that letter from the IRS to know exactly what you received and what you are entitled to when you file a tax return. Child tax credit. Okay, so this is for 2021 only. So this is the tax return that you're filing now. There are a couple changes. So historically, there's been a $2,000 per eligible child up to age 17, not including it. This year, if you have a child who is 17, you are going to get that $2,000. In addition to that, if any child 6 to 17, there's an additional $1,000. So in that case, that would be a total of $3,000 credit you get for that child. And likewise, if they are under the age of 6, so essentially birth to 5 years old, it's an additional $1,600. So in that case, if you have a child under the age, 5 or younger, that would be a $3,600 credit. Now, some folks received what were called the advanced child tax credit payments, which began on the 15th of the month in July. And essentially you got a payment on the 15th of each month for the last 6 months of the year. This is where it's important to have the letter pertaining to this, because it's going to list out the amount of the payments you received. And there were months where some folks had issues, so you're going to want to reference that letter. There again, whatever you did not receive as an advanced child tax credit payment, you will get when you file your tax return. So there's opportunity for pretty significant child tax credit there. All right, digging in a little deeper, this one really has not been talked about, but for parents who have children in daycare, it is a huge change. So what we're looking at here is, in the past, there's a credit available if you pay for daycare and have your children in daycare. And the eligible expenses would be, if you had one child, $3,000 a year, 2 or more children, $6,000 a year. So it didn't matter how many children you had, but if you had 2 or more, it's capped at $6,000. And the max credit you could get was 35%, which meant if you met all the proper criteria, the most you could qualify for would be $2,100 in credits, which would be the 35% of the $6,000. And then it went away very quickly. If you were somebody who made more than $43,000 a year, the rate was capped at 20%. So there again, if you made over $43,000 a year and had the maximum amount of childcare expenses, the max credit you would see was $1,200. Now let's fast forward to 2021. They increased the eligible expenses significantly. One child is $8,000 a year, and 2 or more children is $16,000 a year. And they've increased the tax credit to 50%. And they've increased the max, the income limit up from 43,000 to 125,000. So what that means is if you happen to have 2 or more children in daycare and you expended the full 16,000 or more, you made less than $125,000, you're going to get a credit of $8,000 on your tax return this year. And to be clear, to reiterate, this is a credit, which is a dollar for dollar reduction of the tax you owe or dollar for dollar increase of your refund. Whereas a deduction is just it reduces how much you pay tax on. And then we multiply it by your tax rate, but a tax credit is dollar for dollar going to reduce what you owe. And then to get up to the 20% rate, it's a much higher level. So it's not until you go over 183,000 that you go down to the 20% rate. So somebody in that case would still get $3,200, which is even at that lower level, much greater than what you've gotten in years past. So really something to pay attention to if you have children in daycare. This is a very significant tax credit. All right, itemized versus standard deduction. I don't want to really spend any time on here. This is things that have been hashed out in the past, but this is one of the things that changed several years ago, and I still see folks missing. But the point really of this slide is that historically you had to itemize in order to take charitable deductions. However, in the year 2021, even if you take what's called the standard deduction, you are still allowed to deduct cash contributions in addition to the standard deduction. So if you're single, it's $300 limit. If you're married and filing jointly, it's $600. So, and again, this is cash contributions. So when we say cash, we mean actual physical cash or check that you donated. We're not talking about donating something like clothing or a vehicle or books or something like that. It has to be an actual cash contribution. So that is for 2021 only. I just wanted to highlight that. Meals and entertainment. I still see a lot of people trying to lump entertainment into the mix. Entertainment is gone. It's been gone for several years. However, there are increases to the meals deduction. Meals are 100% deductible for 21 and 22. So something to keep track of there. Historically, they were 50% deductible. And just a reminder too, because I see this one often missed, if you do something that is open to the public, those meals are 100% deductible. So in the realm of our business, open house would be something that's open to the public. And so those meals, if you happen to have, beverages at your open house, or perhaps, some sort of sandwich spread or whatever it might be, in that case, you're going to want to track those meals separately. So at the end of the year, when you go to do your tax return, granted for 21 and 22, it doesn't matter, but going forward, you have those meals that aren't being subject to the 50% limitation. You can actually deduct 100% of those. So I just wanted to highlight that. One other thing to highlight is what's called the QBI deduction, or the qualified business income deduction. We're now speaking specifically to the nature of your business, is that you're essentially only paying tax on 80% of your income. The QBI, qualified business income deduction, is a 20% deduction of your business income. So depicted here in sort of the bottom are some houses and that you may have sold or represent buyers and sellers, and the corresponding commission checks on the right. It's as if you were to sell 10 houses or receive 10 commission checks, but you're only going to pay tax on 8 of those. So it's something to just make sure on your tax return, if you're not preparing it, that you are seeing a 20% deduction of your business income. It is something, as I'm reviewing returns, that I am seeing missed. So do pay attention to that. All right. Paid sick and family leave credits. As a self-employed person, as all of you are in real estate, this is pretty significant. Now, I know the writing is small here, and I don't expect you to be able to read all of this, but I want to give you the gist. What happened last year is really this revolved around employers who had the ability to continue to pay their employees, if the employees were out sick with COVID or caring for somebody who had COVID, or perhaps couldn't work because their child's school was closed or their daycare provider was closed. With that being said, it was a way for the employers to continue to pay the employees, but then get reimbursed from the government for having continued to pay those employees. Well, as a self-employed individual, you qualify for the same programs. Now, there's a number of different criteria that you can qualify under. And for last year, there was actually 2 different time spans where you could qualify. It's worth noting that if you qualified in one time span, and God forbid you happen to catch COVID a second time and be out sick, you can actually claim these deductions twice, or these credits, I should say, not deductions, credits twice, once for each of the episodes when you were sick. The second time period adds some criteria for vaccination. So what's important here to kind of think about is if you got vaccinated and you weren't able to work that day, or perhaps a day or so after, because you became ill from the vaccine, there's going to be qualifying criteria where you qualify for these credits. With all of that being said, there's this various criteria that you have to meet. What I would tell you is if you think you qualify for these, it's probably something you're not going to want to tackle on your own. You're going to want to have a tax preparer, CPA, EA do this for you. Rather than worrying about what the criteria is for the particular timeframes or how much you qualify for, the best thing you can do in this scenario is make a list of the dates when you were not able to work and the specific reasons why you were not able to work, such as my child's daycare was closed on this day. I received the vaccine on this day. In the following day, I felt ill and was not able to work. Whatever the scenario might be, just list out those dates and the specific reasons and leave it up to the tax preparer to run through the matrix of all these possible credits and amounts to figure that out for you. And I would say give them a little bit of time to be able to do that. This particular credit can be extremely lucrative for you if you happen to be, unfortunately sick. But there's many different criteria, many different time frames, and the amounts you qualify are different depending on whether it was you or somebody you were caring for. So again, just make a list of those dates. And actually, this was around for 2020, but it was much easier to claim. You did not have to supply the dates. There was only one time range and one sort of criteria. But on the actual form on the tax return now, we have to list out the individual dates under each of the criteria. So that is something you are going to need to compile. And that's it. I know we ran through quick. I'm going to leave this slide up. If anybody has questions, these are the things that we covered. I am open to answering questions about these or anything else anybody may have questions about.
All right, thank you so much, Greg. I'm not seeing any questions yet in the chat, but Catherine did put.
Sorry to interrupt. I have a quick question. Now, I'm not sure if this is a tax question or something else, but I just recently had a client tell me we closed his house in December of last year, not in December of 2021. And 2 days later, the government put a lien against, or tried to put a second lien on the house that we just closed on. And it turns out he owes more in taxes. This had something to do with the COVID relief. I didn't quite understand what he was saying, so I don't really know how to word the question. But he said that the attorney that got involved said that he got off easy with only owing $8,000. Most people owe like $30,000 or $40,000, and these are for like FHA loans. So is that not that's not a tax question? That's a loan question.
Yeah, like anything. I often say I want to start a podcast called the It Depends podcast, where I answer people's questions. The challenge is everybody's scenario is so specific. There's obviously criteria that led to that particular lien being placed, and it honestly could be any number of things. If it has to do with the loan, I probably don't know what it is. There has been a lot of abuse with these programs because they were kind of created and doled out fast and loose, and a lot of them aren't being audited. But there are people, not to scare anybody, but there are people who took advantage of some of these programs and are going to jail, and the IRS is making a case out of them. It really pertains to the people who took flashing way back what we call the payroll protection program loans, and then went out and they're on social media showing the new watches they bought and the new cars they're driving and all of these other things. And they're really trying to make a spectacle out of those people to say, hey, listen, you got to use this stuff for the right reason. So all that to say, I'm not sure, but there's a number of things where people could have really pushed the rules on certain criteria and then they got caught and they're stuck owing a balance.
Okay. Thank you.
You're welcome.
All right. I don't see any other questions in the chat. Anyone else have anything? You can just kind of unmute and speak up real quick. Any other questions for Greg? Greg, I liked the meals and entertainment one. That's great to know that it's 100%. I don't think I knew that.
Yeah, and it's worth noting, I don't know exactly how they're defining it, but they say at restaurants. The quick backstory there is obviously we were all affected by the pandemic, some good, some bad. The restaurants seem to get the spotlight as really being impacted. So the idea was they want businesses to start spending money in the restaurants again to stimulate them and have somewhat of a recovery. So the rule specifically is having a meal at a restaurant. But
excellent. Great. So thank you again, Greg, for that presentation. It was excellent. But now we are at the point in our meeting where we need to go ahead and conduct our drawings. So we have two drawings that we are going to be doing. There's $100 and a $50. So Susie, is there there's some way that we kind of figure out who gets what or how that works? It's got to be somebody that's present.
Yes, I did set this up. I'm just looking for it.
No problem. Well, while she's looking for it.
Here it is.
Oh,
Here it
never
is.
mind. Go ahead.
All right. So I'll go ahead and share this screen for our handy Wheel of Names game. Can everybody see it?
Not yet. It says Susie has started screen sharing, but there's nothing there.
Okay. And okay.
There we go.
Okay, so the first drawing is for a $100 Visa gift card, and everybody who registered for this event is on this wheel, and you must be present to win. So let's go ahead and find out who wins the $100 card. Oh, a brand new member, Barbara Hernandez.
Excellent.
I don't think she ever signed on.
She did not sign on. Darn. Okay, let's spin it again.
Welcome to the association, Barbara. We got a good teaser now.
Cindy Butts wins, and she is not present.
Okay.
Chances are getting better, you guys. Kathy Gagno, congratulations. Kathy is on, right?
She was
Yes,
earlier.
she is.
Yes, I am. Thank you.
Awesome. Okay, the next drawing is for a $50 Visa gift card. Let's find out who wins. Sue Barnhauser. Is Sue still on the call?
Yes, she is. I'm seeing her clapping. She's muted.
Awesome. Congrats, Sue. Okay, back to you, Paula.
Thank you.
Well, congrats to Kathy and Sue on winning Does Pay to join in on these membership meetings. So there you go. But before we adjourn, I just want to tell you all a little bit about some upcoming classes and events that we have going on, just in case you missed it. So tomorrow, 9 o'clock, there's a commercial real estate forum. We have Jennifer Secciarelli. She's a public health nurse with Uncas Health District, and she's going to give us an update on COVID. So if you are interested in that, go ahead and check out the ECAR website, and you can go ahead and register for that. We also have tomorrow night, as Dustin mentioned earlier, we have a Builders Blend. It's a Realtor and Builder sponsored event at Philomena's. It's from 5:30 to 7:30. From what I understand, there's drinks, there's food. Dustin said there's over 100 builder members that are going to be there. So lots of opportunity for us to network with them. Finally, save the date for another resource conference this fall. We are looking at September 20th and 21st. It's going to be a live in-person event at the Mystic Hilton. So if you want to just flag your calendar now, it's an amazing event. It's one of the best conferences, I think, that are out there nationally, right here at ICAR. And that concludes today's program. Please help me thank the ICAR staff, especially Susie and Catherine, for their help with this event and everything they do. Thanks again to everyone for attending today's membership meeting, and enjoy the rest of your day.
Hey, Paula, it's Carol.
Yes.
I just wanted to let anybody know if Stacy Wyatt had asked in the chat about if you can use nicknames in MLS, and I texted that to Kathy Elson, and she did text me back that they will allow nicknames if they're approved through the alias through the DCP.
The people know who I am. Thanks.
Okay, Anastasia.
Thanks.
Look for a recap on an e-car update tomorrow with all the details from today. Thank you so much, everybody. Enjoy your
Bye,
day.
everybody.
Bye, everybody. Have a good week.
Bye.